Welcome to the AlphaMind Podcast, the podcast which focuses on the person doing the trading, the trader, and their interaction with the market, the impact the market has on them, and the skills, actions, and activities needed to navigate their way through the terrain of the complex and uncertain financial markets. Today, our guest is Sam North. Sam started trading with Amplify Trading back in 2014. Whilst trading his own funds, Sam has helped mentor others to develop their own skills and capabilities as a trader. Eventually, this turned into a full-time role as head of trader development at Amplify. Last year, Sam continued along this path, moving to eToro as their trading school lead, where he helps aspiring traders to develop themselves to attain their trading dreams. Before we start, we would like to thank our podcast sponsor, the Society of Technical Analysts, the STA. The STA have been providing world-beating education on price action techniques for over 5 decades and have been the go-to place for pro traders and investors to learn high-level technical analysis skills. The STA offer a brilliant home study course, which is based off their technical analysis diploma program, which has been taught annually at the world-renowned London School of Economics. AlphaMind Podcast is delighted to announce that listeners can obtain a discount on their home study course. Visit alpha-mind.net to find out more about this offer. Now, on with the podcast.
Welcome to this week's AlphaMind Podcast, and we're delighted to have Sam North with us. Sam at the moment is trading lead at eToro, has been trading from the early 20-teens right through to present moment, but his perspective perhaps is rather different, coming from a different background to perhaps Steve and myself. And I think we're interested to hear his journey, how he got into it, what he found was his niche, and then what was inspired him to actually start to, not just trade the market, but to teach people, to share wisdom and to nurture talent. So Sam, welcome to the show, and perhaps give us a bit more of your background.
Mark, Steve, it's great to be here. Thanks for the introduction. A little bit about me. Before I got into trading, as you mentioned, in the early teens, I had no background, finance, economics, politics at all things we know which move markets. I played sport, football in particular, from very young age up to 18. So I was at Fulham Academy, sort of 8 years old to sort of 14, 15, and then they released me. They said I wasn't tall enough, which I think is just a nice way of letting me down, really. I think that's the excuse they give everyone. But then I went to Reading Academy, and it got to a point where they offered me a scholarship, which then if you get through that, they offer you then the pro contract. But I just wasn't really feeling it at the time, so I turned that down to go back to school. To go back to sort of finish off my education and then studied sports science at Portsmouth. But pretty much straight away knew I didn't really want to do anything to do with sports science, sort of the physio, but I really enjoyed the psychology element of sports science. And that's why I did my dissertation in emotional regulation, and then came out of uni. And luckily, looking back for me, my dad has worked in the city for his whole career. He's retired now, but he was on the life trading floor, and he always sort of, I guess in the back of my mind, it always interested me a bit. And when I came out of uni, he was like, well, why don't you, go and, learn how to trade, see how you get on. And, I did it, and I did a course at Amplify Trading, which is obviously then where I ended up working a year after that, actually. So I did that and had definitely beginner's luck, because as we all know, you're not going to be the best version of yourself as a trader early on, but had a bit of beginner's luck, enjoyed it, wanted to work hard at it. So I continued to do that, traded my own funds after doing the stuff with Amplify, created a little fund with a colleague of mine. And then summer 15, Amplify gave me a call and were like, do you want to come back and sort of help with a little bit of mentoring over the summer for some university interns that they have? And did that, loved it, had a bit of a knack for it, and really since then I just haven't looked back.
Okay, brilliant. And it was good to see the life connection there, because Mark was a day one lifer. He may know your father. I didn't know that. So
when was your dad there?
Yeah.
So my dad was there. I think early 90s.
Okay.
Early 90s. And actually, so I did. Do you know what, mate? Yeah, early 90s. But I did. I think in year 11 at school, when you had to do work experience, that was my first sort of taste of it. And I remember I went in and did some work experience there. And I mean, it was just at that time completely foreign world to me. But looking back there, I really enjoyed it. Really enjoyed the buzz of the city at the time. So yeah, it's a fascinating world, isn't it?
Was he a local?
Do you know what he used to be almost like an umpire almost. So he'd be one wearing the big sort of white coats just to make sure it was all kosher down there. But then he also did some of the education side of things at Life. And then I think during the sort of the back end of the 90s, got made redundant as they made a few changes. But then he went on his own, set up his own company, and then went around the world teaching people, graduates at all these different banks. And so yeah, he's been retired for a couple of years, but we'll just do the odd piece of work here and there. So yeah, I think not long ago, well, just before the pandemic, he was in Nigeria. Before that, Switzerland, Luxembourg, he used to go to quite a lot. So yeah, was doing a lot of education as well. So I guess in a way, I sort of fell into that same path, albeit, that wasn't something I studied at all.
Right. Okay. So you've got both trading and education in your blood.
yeah, absolutely. I never saw myself going down this route, but things just happen, right?
Right. Do you know what's really interesting for me though, that sort of when I go back through that, is the fact that you were you were a sports person. You said you didn't have any finance or economics background. We coach a lot of people, and it's amazing how many people come from a performance background who succeed in trading. Whether it's from football or music or the arts or sport. When I say football, we see quite a lot of people who experience in martial arts, gaming and poker, things like that. Anywhere where there's a performance mentality somehow seems to prepare them better for trading than anything else, because it is a performance activity. And often we can see the opposite with academics who come in and think it's an academic activity.
Yeah, no, I absolutely found
it's more like a sport, right? It is essentially a sport in its own right. If you guys look at the fabric of a market.
Yeah, absolutely. I was just thinking, and I was actually, I know you're the guys asking the questions, but have you found people that came from a sort of an individual sporting background have performed better than maybe people that came from a team sport, or is there sort of no real connection there?
I think I've not really looked at it like that, but I have noticed a lot of people who were. I probably noticed it more with people from individual activities, individual sports. Yeah. Like I say, music is where I see a lot of musicians that seem to do really well in trading. They just seem
that makes sense.
It's I think we had one of them on the podcast last year who said that he just saw markets like he saw musical notes.
God, that sounds good, doesn't it?
The patterns, the rhythm of the market.
Yeah.
We had a couple of people actually. We had a system builder who was from a musical background as well. He was actually one of the market wizards.
Yeah.
Yeah. So it's but it's almost like there's a guy I coached who was a martial artist, and he sort of recognizes the risk management is like having your gloves up when if you let your gloves slip, you're in trouble if you expose your face. And he said it's the same with trading. If you expose yourself too much, you're going to get into trouble. So that felt very natural to him.
Yeah.
Quite a few golfers have turned up as well. I mean, people that whilst in a competitive world, you're playing your own game essentially in golf, and it's much the same psychology. The golf course being played between your ears, trading being played between your ears rather than what's in front of you, and taking each moment as it comes and not prejudging, the next shot before you get to the next shot. I mean, it's the same thing with trading really. So the awful lot of overlap, even in my professional career, a lot of overlap with golf and to some extent tennis, which tends to bend obviously towards the individual sport strengths than necessarily team strength. Although obviously there were a handful of rugby players and footballers, but it was very strong on the golf and tennis front.
So how did you, Sam, how did you find that? I mean, you threw that question at us. Do you find more individual ones than team ones?
Yeah, I think so. And I mean, when I look back at my sporting career, I didn't love the academy environment, even though I'm a massive team player. I love team sports. For me, when you're, in your teenage years, everyone's trying to become a pro of whatever sport it is. In a team sport, doesn't become team sport because everyone's out for themselves. Whereas, if I play football with my mates on a Sunday, it is a team sport because we all sort of buy into it. And I sometimes think, oh, I wonder if I actually should have done a golf or a tennis, because it is performance based and it's on your own, and the end result is what the end result is, and you can control a lot more than that. So I've always thought I would have been better suited to do an individual sport. And I try, and I don't succeed at it, but I try to play a lot of golf. And the amount of similarities with like you just said there, Mark, between sort of trading, the psychology between the two is fascinating. So yeah, I found in general, those that come from sort of individual sports maybe do a little bit better. I also found it really interesting what you guys were mentioning there about, people that come from sort of an academic background sometimes really sort of struggle, right, with because they come and they, not to sound in a bad way, they think they know it all, and of course they know way more than a lot of people, but when actually putting that into a trading system or environment, they can struggle a little bit at the beginning.
I found that. I mean, I used to coach graduate intake, and you're absolutely right. It was the economists that thought they're going to become the heads of trading, but I mean, you could tell from almost the first conversation, you just don't get it. You just don't. You're so textbook. You're so theory. Actually, and your speed of thought is very, very macro, and sort of getting your head around big pieces of work. And you need to be lighter and more agile in trading. And they didn't have that agility of thought at all.
No.
Yeah, a civil engineer graduate actually totally nailed it. From day one, he knew it. He could work it out. But the economists, they just they didn't pass the test.
Yeah.
In general, yeah.
Well, engineers are dealing with real world stuff,
Yeah.
And so are sports people, and it's a practical activity. You have to deal with what's in front of you. It's and I think also they're very competitive, which I think is another key element. Performers are naturally competitive people, and I think sometimes in this job you have to be competitive to force yourself. Against you. I think you're competing more with you than anyone else. You're holding yourself to account.
Yeah, absolutely, and that's it. That is completely it. You're competing, yes, against other people when you're actually trading, but the only thing that matters is your own performance and where you're going to be in the future, whether that be 5, 10, 15 years, whatever. And you've got to have that consistency. It's all very well and good being okay for a couple of years, but it's all about when you actually finish, right, and how you get to that point and having that consistent. And you've got to perform at a consistent level rather than just a high level here and a low level there. It's got to look for that consistency, as I'm sure both and obviously all your listeners will as well.
Yeah. So in your work, I mean, you're perhaps you could describe your work a little bit more to us. So and then how are you applying some of those ideas and principles in your work?
Yeah. So my role when I was at Amplify was to be a mentor risk manager. So we would have this course where people would come and learn to trade, and they would come from all different backgrounds. Some would do it as a way to get into a job in the financial system. Some people would do it as a career change. Some would do it just to find a little bit more about themselves, whether they liked it or not. So we would do this course that would sort of be sort of nine weeks long, where people would come, and I would sort of head that and mentor them as they went through. And then I last May moved to eToro, which has been absolutely fantastic. I absolutely love it here, and it's opened my mind up a lot more to the investing side of things, but obviously still doing the trading stuff as well. So here at eToro, I do quite a few webinars, but really I'm in sort of charge of the education that we put out. So we do a podcast similar to the one you guys do, where we just talk about sort of the three main subjects that are going on in markets. There's a little market update, and then we do special episodes here and there. We go around to universities. We sponsor currently in the UK 6 football clubs. So we would do I would go and do a seminar, like a learn to invest, do this, don't do that, avoid these kind of things. So yeah, education is kind of what I do. And one of the things that happens every month is that I would do a sort of learn to trade webinar series, like a 3-part one. And most of the people that will come to that will have absolutely no prior experience. It's kind of aimed at people that are just sort of new to the platform. And I just want to take them on a little bit of a journey, really. And I think, and you guys will be able to say this in more detail, but having sort of a mentor really speeds that process up from getting from A to B. So for me, when I Amplify, I probably mentored sort of 500-600 people. But here I'm doing a bit more virtually, but I still think it helps them quite a lot. So we'll take them through initially, what are markets? What are they potentially trading? Because one of the main reasons I've always found that people say fail early on is they don't actually know what they're trading.
Right.
So just going over a few different characteristics, whether that be volume on a certain time of the day or what drives them or what correlates them. And then just making them aware of the different type of trader. Some people will be working full time. If you're working full time, are you going to trade, on a 15-minute time frame? Probably not. You're going to be a longer term investor if you want to go down that route. So helping them find out a little bit about themselves. At the end of the day, they do have to do that themselves, of course, but taking them on that journey, making them aware of all things technical analysis, even if they have no intention of using it. I mean, I don't, there's, all these funny candlestick pattern names, and, I don't trade off using them, but I'm aware of them because if the market cares about it, I need to. And that's the kind of the message that I portray onto them. So yeah, for me, it's about just trying to give them as much information as possible so that they can go down and express themselves, over time. But really trying to, just build a solid framework for them is kind of how I want to start their journey.
And in the sort of trajectory that they're on in that early stage, what's been the biggest surprise for you? Has it just been the total lack of education, or because of course there's suddenly an environment where they're going to fail. Let's face it.
yeah. I mean, the stats aren't really in their favour.
How are they, at the early stages, what are you finding as their challenge around failing and getting up and carrying on? And how have you managed that?
Definitely lack of patience and understanding of the journey. I mean, it's crazy because when you think about any other profession, if you wanted to become an electrician, you're not going to be a good electrician in 2-3 weeks. If you wanted to be, a good golfer, and I want to be a good golfer, it's not happened overnight. It takes time, and they need to think about it like that. And I think people are too eager to jump straight in, and those that do go do that, they then risk too much. What's the best way to stay the longest time in this game is to reduce your risk size, right? So some people, I did a poll on Twitter the other day, and I think it was for traders, how much would you risk per new trade? And the most common answer was, I think, above 5% per trade. And I was just like, but it just shows that, that's the type of person that's answering that question. And that's going to be one of the reasons why most people fail. They risk too much. They haven't, got that patience to realize that this is something that's going to take time. So for me, that was very much the sort of the first clear thing is people had the wrong view on trading. And look, we know there's a lot of cowboys out there, aren't there? With these courses that you see, with the flashy Instagram posts and all of that. And I think it just creates a false image, shall we say, that people think in a week they're going to have a Lamborghini, which would be great if it was true. But as we know, it's not.
It's, actually, this is one of the things we're railing against all the time. And, I work with people who are, been doing it nearly 10 years and are just turning the corner into profitability. And someone asked me yesterday, how long do you think it takes to become consistently profitable as a trader? And my answer was 5 to 10 years. And he told me that originally he thought it was a couple of years. I mean, this guy's been doing it about 15 years. But he originally thought that was a couple of years. And then he knew a couple of people who were making good money after 2 years, but have now blown up.
Mm.
And he's sort of realised that, you know, it's quite easy to make money in a bull market for a couple of years, but then you're using too much leverage normally.
Yeah,
and you're using a system that is working well in a buy the dip style. But as soon as those dips stop and become, as we're seeing now, kind of longer, deeper dips, those people are suddenly full leverage, have bought more on the way down, and have then been cleaned out. And but it's really strange, isn't it? I mean, that learning journey is, like you say, people approach trading the wrong way. It's an incredibly skilled job, you know, and to be successful at it, like any skilled job, takes many, many years. You know, if you were, the example I always bring is, you know, a guitarist or a boxer, you're not going to start learning that tomorrow and be playing guitar at a venue as a back, you know, for a backing band or a great singer for many, many years. And the same if you started boxing, you're not, you know, you may turn pro within 3 to 5 years, but you're not going to be competing for a world championship for another 5 years or a, you know, a major championship. So there is this complete, and I understand it. I'm sure I would do the same. You know, if I was 20 now, I think we all did do the same. You know, when I started, you know, in the dim and distance past, probably a rough time to your father. You know, we were all starting when it was penny shares in the 80s. And we were getting penny share newsletters, written by people who knew nothing about penny shares. And they were coming through, you've probably never heard of them, but it's called a fax machine. We were getting these faxed letters every single day, and we were like rushing to buy it. And then I think October 1987 woke all of us up with a shock to what this was about. And I knew a lot of people who kind of lost everything, you know, their car, the home they just bought in that sort of one day. But we all do it. We think trading's easy. Someone else tells you they're doing it, they're making loads of money. There's a guy here we know who's usually, you've heard a story of a guy in the papers who bought Bitcoin, he's now a multi-millionaire. And, you know, it's just a reality that, you know, we all do get sucked in. We're all vulnerable to that. We all think there's easy money laying under a palm tree somewhere that we're going to pick up pretty soon. But, you know, what myself and Mark and us at AlphaMind are trying to really work on is we're doing something similar to you. You know, we're trying to educate people. We're trying to work on whereas we're not teaching them, we don't teach analysis techniques. There's multiple different analysis techniques that people can use. We don't teach a system. We try and work on the interface of the person who you are to the market and how you navigate that journey and how you develop your risk process and how you manage yourself, which I think is probably the biggest and most important part of trading. Yeah,
I completely agree. I say, you know, if anyone was to ask me, name the 2 most important things in trading, I always say self-awareness and discipline for me would be the top 2.
I like to think of it as you're sort of trading your own ticker tape.
Absolutely.
Okay, you're trading the market in one sense, but actually you've got to be trading your own ticker tape and understand, you know, how you're regulating that and, you know, spotting when you need to do something and you need to pay more attention. Yeah, and people just don't do that. So I think it's a really, you know, almost like, remember the old CNBC had that sort of ticker tape flying across the screen. You know, having something of yourself that's got, you know, stress levels, you know, how awake you are, what your nutrition is like, you know, what you're getting your golden source material from to make these decisions. And you constantly need to pay attention to it. So it's not a snapshot. You know, it just carries on changing daily. And all of us are very, very different. So we've all got to pay particular attention to what our self-management ticker tape looks like, because that's what professional sports guys do. That's what they're monitoring. That's what their coaches are monitoring. They're just keeping it optimal all of the time. I just wanted to share that because that is so fundamental as to how we operate at almost called us mastermind there. From mind.
Sam, if I'm going to ask a question of you that probably a bit unfair because I've not asked you to think about it, but you work with lots of people, young people, probably people changing careers and jobs. Maybe some people have got a lot of money, have sold a business. What would you say? Obviously, there's quite a few people who do come through as successful.
Yep.
You know, do you notice any patterns amongst those that succeed?
Yeah.
Anything that they're doing habitually or regularly that's different?
Yeah, absolutely. Two things. One, which I see a lot, and even from you. So you mentioned the type of people I literally would have dealt with. Some will have crazy amounts of money, and like you said, sold a business, had a very successful career, inheritance, whatever, and then you'll have people that have absolutely nothing. But the common theme that I have seen with people that I know have been successful and are still successful is that when they started out, they hardly risked anything, and it was really for me quite striking. They, and especially seeing people that I knew were very wealthy, for them to only risk, say, 20 initially starting out $25 per trade, I thought was very telling because they've really taken the time to actually learn that journey. I mean, look, price going from A to B, as we all know, can be £10, £100, £1,000. It actually doesn't matter, really. It's just the monetary value. I know it influences the psychology, of course, but I found people that were very, very disciplined with regards to their risk. They're still about now. They're still trading very, very well. And also the other thing was, out of all the people that I'd mentored and seen traded or seen mentored, women performed on average quite a lot better. Definitely, there was something that stood out. I would say in general, they were a lot more risk averse, again, which is something that's just so important. That sort of self-awareness, understanding yourself, I think is just so important in trading. I, for one, know that when the market is incredibly volatile or when there's a news announcement out, I'm going to lose money. And I just avoid it. So I look at the calendar. Okay, we got, let's just say, non-farm payrolls coming out in 10 minutes or coming out later today at 1:30. Right, sweet, I'm not going to trade. And that's absolutely fine.
We will return to the podcast shortly. Just a quick reminder that listeners of the AlphaMind Podcast can obtain a discount on the STA's Outstanding Technical Analysis Home Study course. Visit alpha-mind.net to find out more about this offer. Now back to this week's podcast. So there's some fascinating points there. Just coming back to from your last one, I often find that the women I've worked with generally have been better than the men. It's probably going to upset a few men out there.
Yeah.
Quite happy. And I think it's because generally they are, I don't know what the reason is, but I think they have less ego.
Yeah, I think that's it, isn't it?
And I think there's a lot of ego out there with men who want to show how much they can make. They're looking for the Lambo and the Rolex and and I've noticed over the years that not just that, but with the men that really do successful as well, it's that suppression of ego, the sort of detaching the ego. Really, there's a few things. I mean, one other than it allows them to focus on process and not get distracted by that. But also, it's learning. They have time to learn, to go through it's, as we say, it's a multi-year learning experience.
Yes.
And if your ego comes in, first of all, you're often rejecting the learning. It's a kind of, I think, Mark, you came up with a great phrase the other day, the disease of me. Is that what a me disease? Was that how you called it?
Absolutely, disease of me.
Yeah. I'm special. I know better than anyone else. I don't need to listen. I don't need to.
Yeah, very fixed mindset. Absolutely. And I think just on that playing around with the female bit, just whilst you're on the subject, the female of the species is far more embracing of soft skills. The emotional intelligence side, and the need to pay attention to that, whilst historically men don't tend to.
And one of the reasons, male of the species,
the male of the species, the male of the species. I mean, one of the reasons why we got John McCaskill on, who's a Navy SEAL commander, and is now doing mindfulness for veterans, was that guys, look, the military special forces are getting involved in this stuff on the emotional intelligence side, and the building up of these soft skills of actually being, the new superpowers, quite literally. Then pay some attention to that. And the female of the species is doing that better than men. They embrace it more likely on a regular basis. They bring it into their life. Men might touch it and think, I don't want to be seen to be getting near it. But then look at the outcome. You're saying, the female of the species are better at trading than men. There's a message there.
For sure.
And the other thing you said also really struck me as interesting. And again, two things about this risking small. So I recently had a call for a guest who we hope to have on in the next few weeks, who's a fantastically successful trader. During the sort of introduction call that I had with him, he mentioned a point that when he started trading quite a few years ago with a lot of other people, all the other people were putting on loads of risk. They were so quick then that they wanted to be millionaires by the end of the first week, that sort of thing. And he said he was dead scared to lose money.
Yeah.
So he traded not to lose money. He just wanted to stay in the game. And he'd had an experience of a family member who traded and lost everything. So he was a bit impacted by that, or had seen that firsthand. So for him, he said from that moment onwards, he just traded not to lose money.
Yeah, I think that's...
to develop a process and a method which then made money without losing money. And that became the cornerstone of a fantastically successful career.
Yeah, absolutely. That's a great sort of phrase there. When I first started trading, we did this course, and my brother did the course with me. So we actually had each other. We sat next to each other in the office, and when we traded at home as well. And he came from a economics background, but he was also from a sporting background, which I think helped him. But we were really scared to take a trade on the demo account because we did not want to lose money, and that's absolutely the right way to go about it. I know that it's hard when starting out to treat fake money like it's real money, but for me it was, and that I think really helped me at the beginning. I mentioned I had beginner's luck. I absolutely hit a bumpy path in the road, later on, but just reducing that risk gives you that longer time to, before you do get in a big hole. Whenever I do this course, and it's actually happening tomorrow, there was a tweet, Steve, that you retweeted, I think it was someone ages ago. And I always bring up my phone and read it. And it was someone who, I think you retweeted them, and it said something like, I risked 0.25 to 0.50% of my account per trade. And that's obviously how, if only they were to lose, say, 4 or 5 trades in a row, which can happen, they've hardly lost anything of their account. And I think that's just really striking. People think, God, I'm going to risk 5-6% per trade. And, in the pandemic, I lost 8 trades in a row. If I risked 5%, suddenly that's 40% of my account gone in a second. It's so key. And that's a great comment from that chat.
Yeah, I think, when we work with individuals in funds, hedge funds, at 5%, they're out. They're gone. So if they give them a lot of capital to trade with, obviously huge amounts, and they're very risk averse, the funds, despite the common, sort of image of them. They're often given money from pension funds to trade with, and the pension funds want to make sure they get that money back. So they're very, they have very strict mandates about how much they can lose. So they've normally got a 5% drawdown limit. So these guys are often trading sizes of 0.1 or 0.2%, which is quite large if you've got 200.
Yeah, no, of course.
But in the actual, they're not putting that, in reality. And if, the really strong guys are averaging, high single-digit returns a year. The superstars are, they're the ones who are coming in close to 15-20% return a year. They usually own the fund. Sort of Paul Tudor Jones, people such as that. And if you ever read these guys, what they talk about, like Paul Tudor Jones says, losers average losers. That's his famous phrase. Never add to a losing trade, which every beginning trade does. Every beginner trader pretty much does.
Yeah, I remember I was speaking to my dad beginning of February 2020, and markets were going pretty crazy back then. I think it was just starting to really kick off.
Yeah.
And so I was just speaking to my dad, obviously, because he was alive. He worked a bit on the trading floor. And I said, oh, you must have spoke to some people that did incredibly in like 2008, 2009. He goes, well, to be honest, whenever I asked that question, anyone that I knew was very successful all said the same thing. My best trade was when I came out of a losing trade early. And I just thought that was just incredible. Like I went in for the answer. Oh, I made hundreds of millions, and I just came out of a losing trade early. That's if I had held that, and look, there would have been a lot of people that would have blown up in 2020. Like you said, buying the dip and just adding to it, and to take a losing trade off early is sometimes the best thing you can do.
Yeah, I mean, people have to understand that. I was speaking to an individual recently in the energy markets who's a veteran of the markets, really successful over 20 years, possibly the most aggressive trader you will ever meet. And I asked him, what was your best ever trade? And I fully expected him to give me this spiel.
Yeah.
He went, every single stop I've ever put on. I've been on.
That's it, isn't it?
My best
That
ever.
is it.
Yeah.
I think if anyone's listening to this podcast and was only to take one thing, that's it right there, isn't it? It's spot on.
Actually, deciding that you're wrong and don't trade is also a really profitable trade as well. Some people guess, that sort of that movement towards it with little thought that I just want to do this because I'm bored. That self-control is like, no, actually, it's not a trade. Don't do it. That also is a lifesaver for many people. That self-control and the process around that, in as much as way that you manage these stops. And of course, one of the biggest failures that I've ever seen is when the stop gets turned into a double up the other way type trade.
Absolutely.
When the stop gets activated for that trade, the other way around moments later. You see tragedy out there when people are pushed into trading for the sake of it. Everything goes out of the window, but it is very, very common. It is super common, and so many people that we speak to that people just get into a bit of a mess. They lose all sense of just what they're doing, and you probably saw that in the early stages of the people that you were mentoring. For a moment, when they were just caught in the headlights, as it were, and just frozen. I mean, I've seen that professionally, but you would see people that have not faced fear suddenly just get to this point of being in a bit of shock, and then start making mistakes because they'll still carry on trading, and then you can just forget it.
Yeah, absolutely. Seen that many times, and it's incredible just watching people that have been composed, but they lose control and they sit there and they are frozen. And it's they can watch. And obviously, as a mentor, we could see and even on the demo accounts, right? We could see the live P&Ls, and you could see someone blow the one risk limit. And if it's on the demo account, sometimes I'll do it, let them learn this lesson. They'll just be watching it, just praying and hoping it will come back, adding to that position. And it only ends up bad. And to be honest, the worst thing that could happen is them getting away with it, right? And it turns around and they suddenly make money because you think, oh, God, I've got something over the market here. And that, it's just never going to end well, as everyone will know.
Is there a bit of a performance mentality again there with that? The way a performer sees things. If you go back to a football match, you might be 5-0 down. I'm sure you've had those games. You're 5-6-0 down. You're getting hammered. You still have to keep going. You don't want it to turn into 10-0 down. The game is lost, but you've got to, you've got to sort of just, right. We've got to stop the hemorrhaging in the game because you've got another 30 minutes to go, maybe, or and you've got to be careful not to lose it. You don't want to get sent off. You're already getting hammered.
Absolutely.
You've got to be there for the rest of your team. Like we say with a boxer, you have to keep the gloves up. There's a time in every game every fight where you're probably going to be under the pressure, and you've got to survive those moments. Back to the wall, in the corner, gloves up, get a breather, get to the end of the round. Stay in the fight.
Yeah, absolutely. I mean, that's it though, isn't it? It's like look, we're all going to have bad days trading.
Yeah.
Stay in the fight. Do
Yeah.
not, that's why I think it is useful to have, say, stop loss limits.
Yeah.
1R people will call it or whatever, or a maximum amount of trades you lose in a row, or max amount you lose per day, per week. If you lose a certain amount, you then de-risk even more. Having those rules and procedures in are what keep you in the fight, like you said. So absolutely, it has that sort of sporting, correlation, which is something that I think helped me, and I've seen help others, and obviously you guys have as well.
Yeah, no, that is so true. So if we come back to this, you said about what are some of the characteristics that you see of people who push through, and you've mentioned a couple. Are there any more sort of patterns you see amongst those who make it?
Yeah, I always used to, when the traders first started live market. So some would have traded before, some never would have, and we would always get them trading. I think there were 6 markets, so about 4 currency pairs: euro, pound, Aussie, and yen against the dollar, gold, S&P, oil, and Nasdaq. Actually, so it's more than 6, but they would have traded those for 5, 6, 7, 8 weeks before they went live, which still wasn't obviously a long time. But what I would always do, every group, I would give them all a piece of paper, or if they're doing it hybrid at the time, an email, and I'd say, here are the 8 markets, and write me down if you were only to trade each one once today, give me your best opportunity that you see. And they'd hand that in usually before 9 a.m. And I'd collect them and we go through them at the end of the day. But I'd keep everything like in an Excel document. And then when it got to sort of 4:30 European close, we would review them and against the ones that they had planned compared to what they then done. And it was incredible the amount of time. So say someone said, I'm going to go long S&P yesterday's low. It would get down to the low of yesterday in S&P, and this person would go short and lose. And it was just incredible. So they've taken all this time to write down their strategies. And by the way, pretty much every group made money every time I did this just from writing it down. If they had only taken those trades, and then on average, when they're on the trades they actually taken, they lost quite a lot of money. So it's just incredible that just from taking that time to really plan and not trade on emotions, just because the S&P is now on to yesterday's low, you're panicking. If nothing's changed and that was your strategy and you've taken the time, you like the level, you like the interaction that you're seeing, you like the risk reward, it's you go to all that planning to then trade, like you said, Mark, when someone flips over a stop loss and then goes short. It's trading on that emotion with that lack of planning, which I think has led to people coming up short. But those who really do have the patience to plan and stick to it and are very disciplined, they've certainly had an edge over the others from what I've seen.
Yeah, I think that's that's such amazing advice, and it's you're seeing it for real with lots of different people.
I mean, it's I think as well, what I've seen that's helped is when people actually get into a trade. And I was certainly guilty of this at the beginning. For the first sort of 6-7 months, I was winning more trades than I was losing, and would always go in with the approach of a minimum 2-to-1 risk reward. But actually, my P&L was negative, so I was coming out of winning trades way too early and letting my stop loss get hit. So I'd had the plan out, and then it took me to really journal all of my trades to see, well, what would happen if I actually just stuck to my plan. And I would have made way more P&L than not. And for those that sort of stick to their plan and have rules to come out, have performed well. So for me personally, I always say to people, create your own rules, but it might be if something fundamentally has changed, of course, come out of a trade. Really and truly, if you're a short-term trader, you're probably not going to be fast enough to react to it anyway. But that could be big data headlines or correlations. For me, if any of those change, I'll come out. But if not, why would I come out? I've done all that preparation. I, in my case, back tested it, seen what's happened, got the stats to back it up. I'm just going to take it on. And I think that's another characteristic that I've seen that has helped with people is just patience and sticking to their plan.
Yeah, absolutely. Do you see any difference in sort of older people who are starting now versus younger people who are sort of fresh out of university or even fresh out of school?
Yeah, mix. I mean, some of the younger people. So we would get obviously people that are incredibly clever graduates that come, and some of them would have this, and obviously they're incredibly intelligent, so they would have this ego which would actually hold them back a little bit. So I would say more than sort of, but then there would also be people that don't have that ego. So it'd be more, I guess, based on the individual in how they came across themselves and their sort of, I don't know the right word, but how much ego they had. So the same with people who were older. If people were happy to come in and learn,
Yeah.
they generally did better. We would have people of different ages that would come in, and I remember there's someone I got fresh in my mind. He just didn't want to listen, and he was incredible, past career, very successful in what he did, but he was very used to clearly getting his own way and being successful. So when it came to trading, and as we all know, it's incredibly hard early on. It for him, it was just way too hard, and he was just making mistake after mistake, but kept believing he was right. So would add to these losing positions, would risk too much, would make excuses when the trade went against him. Oh, I knew that was going to happen. I should have done that. And it's just, I think ego is I've seen a sort of a bigger difference than maybe sort of age, and it's really sort of personal. I guess I haven't seen massive sort of areas with age that have been common.
Right.
Can I ask on that? The newbies coming in, are they bringing skills that perhaps surprise you? Obviously from the gaming world, things are going on in the background. People might be wanting to get into writing their own algos, perhaps quicker and more naturally than perhaps someone that's a bit more aged coming to the market that doesn't want to get anywhere near it because he needs to, learn significant skill. But do you see a bit of a trend as to the fresh blood coming into this market, almost naked, as it were, through the program? What have you seen?
Yeah, definitely. Yeah, the younger generation. I guess in a way, some of them come in, and with the whole GameStop, the AMC kind of market, they expect it to be instant returns, perhaps more than those that have an understanding of the stock market, that it can crash here and there and all of this. So they sometimes actually are too sort of fresh, and they expect these massive returns overnight. So they struggle a little bit more. So those that are maybe more aware of the market even before they get into trading, actually are performing a little bit better. But obviously the younger people, they are very interested in this whole algo development and which is way beyond my capabilities. I actually am, funny enough, as of last week, sort of looking into developing an algo myself. But long way off for me.
And are they more inclined to lead towards crypto as well?
Yeah, absolutely. I think it's I think the stats are there, aren't they, with younger people, in terms of crypto investment compared to any other age ranges, that they're winning that by a long range. And I think that's good, though, with the sort of the rise of the retail investment, and for those younger people who maybe don't have money, for them to go, okay, let me put some money in a tracker, I might make 8% on average a year, or well, hang on, let me go into this sort of crypto, and I might potentially be able to make more. So I think they've got that sort of mentality. I think at eToro, we're and I certainly wanted to display this. It's great to be diverse. It's great to spread that risk, and obviously never invest more than you're prepared to lose. But certainly coming in and doing these talks around universities, a lot of them, if they've got any investments, they're usually crypto or Tesla.
Absolutely. Listen, I'm mindful that we're getting close to sort of wrapping this up. We haven't really spoke much about eToro, and if I'm honest, although I see the name around a lot, and I see it on football grounds and the clubs, the shirts as well, I'm not that familiar with it. And there must be a few people who have heard the name, probably listening a few times. So perhaps you could just sort of explain what it is they do and what you do at eToro.
I mean, I was at what uni was I at last week? Warwick and I asked people, had anyone heard of eToro, and they had quite a lot put their hand up, but same sort of thing in terms of understanding what they do, maybe not so sure. The advertising, as you mentioned, is everywhere. It's on the football stadiums. We sponsor 6 football clubs in the UK, front of shirt for Monaco and other football teams like Rapid Vienna across Europe. So, as a lot of sort of retail platforms have seen, really sort of post or during the pandemic, there's been a massive rise in retail investing, and eToro is at the forefront of being sort of a sort of social investing platform. So there's like people can share their ideas, bounce ideas off each other, interact with each other. So it's quite interesting from that point of view, and it's got a sort of USP is something called copy trader. So let's just say I've got an account on eToro, and anyone can click on my name, see my history, everything that I've ever traded, how long I hold trades, and they can say, well, I'm going to copy this person. So any trade that they put on, I also do. And some of these people are insanely good, and look, let's be real, the last 10 years, markets have pretty much gone up. So it's been, okay if you know what you're doing to make money. But still, some of the returns that these people have are just incredible. So people can copy these popular investors that they call. And then we've also got these really cool sort of smart portfolios. So that we've seen the rise of sort of thematic investing over the last few years, where people want to invest in like an area, whether that be like crypto or driverless cars or cybersecurity. And we're seeing younger retail investors think, okay, well, yeah, I believe in that. Okay, let me invest in rather than just one company. Let me go down the route of saying, okay, yeah, I like the idea that in the future it's going to be electric vehicles. Cool, let me invest in that. I think, the cannabis industries and we have more legalization. Cool. NFTs. We have all these sort of smart portfolios that are dedicated to certain sort of fields. But yeah, it's sort of a social investment platform. I think there's now 27 million users on eToro, which is incredible numbers. And my role is really to help with the education of it. And I do a webinar every Monday, Tuesday, Wednesday, a weekly course, we do podcasts. We go around to football grounds that we sponsor, and we're looking to do some work in the community sort of area too. So it's my role is just to help with the education. I've been doing this since May last year.
Brilliant. It sounds like it's something you love.
Yeah, I do. I when I was playing football at that level, I mean, I love playing with my mates, but Fulham, Reading, I didn't necessarily enjoy it too much. And what I really enjoy is actually being in a team where everyone's got the same goal. So I love that. My team at eToro is great. It was great at Amplify as well. But one of the things that really gets me out of bed is when someone will be like, they learn from something I've done, and they message you, be like, look, what you did, I've implemented that, and it's been XYZ. It's done XYZ for me. And that's how I get my kicks. It's obviously working at eToro and Amplify would have slowed in a sense my trading journey down, because I'm not trading all the time. But that was a sacrifice I was more than willing to make. And also, in a way, it probably actually helped my trading, because I think having an income while trading just psychologically makes it so much easier. So I think that's sort of helped me along the way. But I just really like helping people. I mean, I know when people usually say that, you think, well, God, this guy's he's chatting rubbish, but that's the way I see it.
No. It's and it's interesting because we often talk about the importance of passion when you're trading or whatever you're doing. That it's one of those things that will get you through. It will get you motivated. It'll get you pushing through when things are good, and then also surviving and finding a way through when things are hard. I just want to jump on something you said there as well. The importance of having an income when you're trading.
Yeah.
You talked about and this is really important. You talked about some people who are really wealthy, made a lot of money from various routes, either they sold a business or they had a family income or whatever, or they've just done very well in their career. And then they've got a lot of money behind them, which means they can trade small and learn the game for the first few years, as opposed to people who need to put food on the table. The moment you need, that word need, to make money from trading, it's when you're going to be owned by the market.
Oh,
You're going to be
100%.
owned.
Yeah,
So,
I mean, I traded with someone who literally is the way you're describing it now, and he worked at Live for quite a while. Giuliano Gregorio, his name was, and
yeah, I know.
incredibly smart man, and he mentored me a lot actually, and I catch up with him every now and again, and he will trade, and if he has reached his target at 8 a.m., that's him done for the day. And I'd always found that fascinating. I just thought, wow. I mean, for me personally, I don't think you should have a profit target, because I feel if you're in tune with the market, crack on and go. I think you should have loss target for sure. But for him, super disciplined, didn't risk much. And yeah, he's just been so consistent as a trader for all the years that I've known him. And he was definitely doing it before I was as well.
Mm-hmm.
That's wonderful. I mean, that's great advice as well, to people. Sometimes, if you have a way of doing it, and that is one way, adhere to it. If it keeps working.
Make trading boring is something I always say.
That's Peter Brandt's comment when he was on a Chat with Traders interview I heard a couple of years ago, and he said, "Your job as a trader is to make this job as boring as possible."
Absolutely. Yeah, definitely. I think the moment you sort of get out of control, like Mike said, is when people sort of spiral out of control and they're just paralyzed by the markets. It usually doesn't end too well.
Yeah. On that note, maybe we should start wrapping up. And any final thoughts, Sam? Anything that you want to just put out there? I mean, where can people find out about you?
Yeah, I mean, obviously, people are more than welcome to message me on Twitter, Sam North _ eToro, or send me any messages by that way. My advice to anyone looking to get into whether it be trading or investing is just understanding, it's not a race. You've got to have the patience. And you've got to understand yourself. I think is as I mentioned before, self-awareness, discipline are, for me, the two most important aspects of being a consistently profitable investor or trader. But it's a journey that takes time, and that's got to be the main goal, to be consistently profitable, not just to have one great trade that makes you a lot of money, because you go into that category, the boom and bust trader. So yeah, having a journey, understanding your sort of goals, and having the patience, and if you can get a mentor, I think it speeds up that process so much.
100%. And there's Mr. Randall over there if they want a mentor. There's Mr. North over here, and there's me as well. We'd say we're probably a bit more of a coach. Okay, wonderful. Mark, over to you.
So Sam, fantastic sort of chat through really through a different lens than perhaps we're familiar with. Passion makes up for the deficit in your plan, I think is a phrase that I really like. I think what's come from this conversation is the understanding that, play the long game. Sometimes you need to slow down to speed up, and education is vital. And getting off with that right sort of level of help to understand your journey and what your own path is, because our own pathways are going to be quite different. Although very interesting what you say about the copy sort of idea within your business. Actually, sometimes other people's paths are worth jumping onto as well, which is super interesting. But also, I think your comment really about
may I have your attention?
It sounds like a fire alarm's gone off there.
Well, I can just carry on in terms your comment about the female of the species, the emotional intelligence, the soft skills, I think is a really, really big message for those blokes in trading, that whatever they are, right, whether they're newbies or whether they're old guys, right, this necessity to grab hold of the emotional intelligence side and the soft skills is fundamentally important to your progress as a trader. Fundamentally. And if it's proven, from what you're saying, and I've heard it from many places elsewhere, female traders seem to have an edge over male traders. And it's about that quality and embracing the things that perhaps men find a bit awkward, but actually they're worth embracing because they'll make so much difference. But Sam, thanks so much. It's been an absolute joy to speak to you today, and we wish you well with your own journey. As you continue through the space, I'm sure you'll progress at rapid speed as well. So good
Thank
for
you
you.
very much, Mark. Thank you. Thank you very much for having me on. It's been an absolute pleasure. Great to chat with you both.
Well, thank you. Thank you for your time. And good luck. We do hope you enjoyed listening to today. If you did, we would be delighted if you could leave a nice rating and a friendly review on whichever podcast service you use. Also, be sure to subscribe so as not to miss future episodes. Thank you to our podcast sponsor, the Society of Technical Analysts. As a reminder, you can check out how to obtain a discount on their outstanding technical analysis home study course at our website, alpha-mind.net. The AlphaMind Podcast is co-hosted by me, Stephen Goldstein, and my co-host, Mark Randall, and brought to you by the AlphaMind Project Limited. You can learn more about us and the trader performance coaching and executive and leadership coaching and other performance development services we offer to professional trading businesses and individuals in the professional and retail trading space. Go to alpha-mind.net to find out more.